Well, I hope everyone had a good Thanksgiving yesterday, and now we're back into the markets today. And I must say, first off the bat, Intel's having quite the day, but it's more interesting reading through the news. I think people are starting to connect the dots, and they're starting to realize that the hub and spokes of our technology ecosystem is a company called Intel. So it's going to be very interesting. I think that we haven't remotely just come to the point where we understand how valuable it is. The way I look at it is you have all our tech stocks, and then you have Intel selling at basically 5% of the value. That is going to change. So whether it goes to 50%, 100%, or 200% of the value of these other stocks, I have no idea. What I'm saying is that Intel's value is going to be much higher than it is today. Okay. Now, several years ago, when we did introduce the five factors, we said the characteristics of the five factors is going to be one, when we break a global system, all right, it's going to take years, not weeks, to fix, all right? And we used like a hurricane hitting the Gulf of Mexico. Close them down a couple of days, reopen it, oil up, oil down. All right? Not going to be that way. Now, when I did that 2.5 years ago, I certainly didn't believe that we were going to end up with rare earth minerals that maybe probably a 10 to 20 year time frame to fix, and estimated by our own government $2 trillion, and we may not fix it. The point is time and money. Okay, that's my point. It's the characteristics of our new world. Now, for us in the West, this is a real issue. I'm not saying the West is the only one, but we all are heavily indebted. All of us are, okay, in the West. And this is going to be the give and take. And we're seeing this across the world as fascinating as can be when you look and see what's going on with the UK budget that they just introduced and what's going on with Japan with their budget that they just introduced. They have almost the exact same characteristics. Very low growth, if no growth, all right? Highly indebted, where Japan's way more indebted than the UK, but still highly indebted. And the biggest difference, I think, between the UK and Japan is growth rate. The UK has nothing going for them. They just put out a budget that helps the people, the poor people, gives them more money, more food, and all this other stuff. But the businesses are complaining they didn't do anything for business for growth. Then you look over at Japan, more debt, but they actually passed a stimulus package of $120 billion. And it's what Takachi calls crisis management investment. They did about 10% of the money to help the people out with the inflation. Japan has about 2.7, 2.8% inflation rate, all right? And food is like 15, 16%. So that's where they gave money. 90% is for crisis management investing. They're putting it into ships, into defense, into chips, into rare earth minerals. These are the things they're investing in because, as Takachi says, we need these things for the next 20, 25 years to grow, all right? So even though they're heavily in debt, they're issuing more debt to invest in themselves to grow. This is what we figured was going to happen. And as we said in that original video, we're going to watch because we believe that we could end up in a situation where the government's issuing of debt will crowd out the corporate issuance of debt. Now, when I say crowd out, it doesn't mean corporate issuance goes away. It means that the spreads between treasuries and corporate are going to go up as corporates are forced to compete with the sovereign debt. All right. So let's take a look at some numbers. So the first thing here is this is a chart of all the cuts or keep them the same interest rates by central banks. And as you can see, we're basically around 93, 94% have cut or kept them the same. No one's raising interest rates. So first, we've all seen this. Here's our debt over GDP. And as we can see, Japan is by far and away number one. And you can see the UK is way down there, but they both have basically the same problem. So here's our corporate debt issuance. This was ending in 2024. You can see it was almost $7 trillion from in 2024. When I asked Perplexity, we're at 5.95 trillion. After 10 months, we're going to be between 7 and 7.2 trillion in corporate issuance this year, 2025, which is an all-time record. Now, we've done several videos on the long-term sovereign debt, how it's just every sovereign debt is just breaking up on their interest rates, just go higher and higher and higher, okay? So you have corporations that issue their debt, and how do we price it? We price it over treasuries. So there's a deal a couple of days ago, it was 2.25 over treasuries. So treasuries are 4%, it came out at 6.25. This is the credit spread of junk and investment grade. Now you can see when we stress, people sell their corporates and up go the spread over treasuries, and they buy treasuries. But if you look here, you can see over here on the right-hand side, we're starting to see the spreads expand. So while the sovereign debt is being issued at higher interest rates and more debt is being issued, and the corporations are at record levels of issuance, the credit spreads are rising up more and more and more. So what does that mean to us, and how is this going to be resolved over a period of time? Well, I think all we have to do is look at OpenAI. OpenAI, as we know, has made 1.2 trillion in commitments to build data centers and all this other stuff. And basically, they just announced that they lost $15 billion for the quarter. They have no money. And as we know, they leaked, I don't know on purpose or not, that they think that the US government should guarantee their bonds. So think about what we just showed you. If the corporate bond is issued and guaranteed by the US government or the UK, whatever it is, right, whatever government, then the yield would be the yield of the government bond. So here you can see you're going to be saving on, let's say, junk, low rated bonds, almost 3%. And on your investment grade, it's about 1.5%, but it's now turning up as the demand for money is starting to skyrocket across the world as everyone is starting to invest. Look at Japan. They just passed, they're going to issue another 120 billion in a stimulus bill. And here's OpenAI. They float that the federal government should support. And they point out that this is not the first time this has happened. We did this with the railroads, and I guess you could actually make the argument that the railroads were, our old way of moving things, and today it's going to be through technology. So is this the way we should do it? I don't know. Tell me in the comments. And you can see now people are starting to look at this debt that the corporations have, and they're asking how are they going to refinance it, and more importantly, at what rate, where is the difference between treasuries going to be? And if we break treasuries and our yields on our 30-year treasury goes up, then all these other yields are going to go up also. How is this going to work out? Now, with the introduction of the $120 billion stimulus bill in Japan, we all saw that the yen collapsed. It went from basically 151 to 157. I think it's 156 something. They're intervening in the thing. And Yudhida on Tuesday or Monday said, I may raise the rates in December, okay? So this is interesting, so the UK went the other way. UK said, we're just going to raise the taxes, stabilize our system. Where on the other hand, the Japanese said, no, we're going to do the stimulus bill and invest in growth for our future. But think about this. Is it possible that you can raise your rates as the offset? In other words, have the stimulus bill, raise your interest rates, which could stabilize the yen and allow you to get away with it until the growth picks up? I don't know. What do you think? All governments are going to have to make the same decisions that's going on. So to me, when I look at this as the US, what way are we going to do? Are we going to do it like the UK did? Or are we going to do it the way Japan did? What do you think? Tell me in the comments, and like and follow.